The Morgan Report with David Morgan.
July 24th, 2020. David Morgan of themorganreport.com for this week's Weekly Perspective. Well, let me start with the stock market like I usually in the habit of doing. And there was, let's just say a few things to comment on. The Dow Jones and the S&P 500 actually remain in a trading range right now. They're kind of locked in this trading range, both of them. But on the transportation side, the airlines are weighing heavily to the negative side on the transportation index, which we would all expect. And of course, there's less driving, diesel, and everything else. The banks are leading the financial sector lower and lower, and that's not a surprise either. And if you look at the sectors, what's doing well, it is technology. This is basically what keeps the market in this trading range currently and doing well or making highs. It's basically your Apple and Microsoft really on a weighted basis. Those two stocks, believe it or not, are pretty much holding the whole thing up. And of course, there's others like Amazon and Alphabet, Facebook, Netflix, your usual FANG type stocks. So that's about it. I will comment that the mining sector is quite strong, as you would expect with gold doing what it's doing and silver waking up here of late. So up first here, this is from CNBC. Coronavirus panic sends Australia into its largest budget deficit in decades. Australia, like all nation states, have been living on borrowed time, borrowed money. And the article goes into this. I won't even bother reading it to you. I will just mention the headline. A lot of friends in Australia. I was invited down there to speak as a keynote some years ago. It was very, very enjoyable. And I feel for everybody on the planet with what's going on. This is one that you can look at with the spread of coronavirus. According to the authorities, what the caseload looks like. He saw this big peak and then it subsided, flattened for a couple of months and then 3 months really, and then it's taking off again, according to them. Right from Reuters, UN reports suggest temporary basic income to help world's poorest amid pandemic. Well, that's it. Let's just print all this money and let's at least give some of it to the poor. A temporary basic income for the world's poorest 2.7 billion people in 132 developing countries could help slow the spread of the coronavirus by allowing them to stay home, according to a UN development program report released on Thursday. Get ready for this. This is going to be, this universal basic income idea is definitely in work. It's in work in the U.S., it's in work in other areas, and it's going to continue. And here you have, of course, the UN saying, hey, the very poor should get, they don't call it that, but a universal basic income. It's all about control. If you are controlled by the state, you're going to have to do what the state says in order to get your paycheck, I would say paycheck, your basic income check from them. So, interesting times indeed. Battered U.S. dollar hanging by a thread as coronavirus cases grow. A steady decline in the dollar has accelerated in recent weeks as a resurgence of the coronavirus outbreak in the United States and improving economic prospects abroad sour investors on the currency. The buck is down 8% from its highs of a year against a basket of currencies, that's the dollar index, and stands near its lowest level since 2018. Net bets against the dollar in futures markets are approaching their highest level in more than 2 years. The dollar is hanging by a thread, senior currency strategist at TD Securities said in New York. It is weak. It is showing weakness. This chart is something I went over with our members just recently, and I expect a lower dollar will continue for some time. And if you listen to my other interviews that I do around the web, you'll see what I really think could happen longer term with the run to the dollar before the ultimate run to gold. But these things are a little tough to predict, and gold is obviously taking out, which I will get to later in this weekly perspective. I want to spend the next probably 5 minutes on food, and then I want to move into the precious metals. But this is science news. Popular seafood species in sharp decline around the world. Fish market favorites such as orange roughy, common octopus, pink conch are among the species of fish and invertebrates in rapid decline around the world, according to new research. You can read the whole thing. It's a very short read, probably about 3 minutes. Basically, we're fishing ourselves to death, and there are other factors as well: pollution, radiation, plastic, a lot of factors. But the primary thread is less fish to eat. Food prices rose in June for a sixth straight month. The higher prices come as business across the country are rolling back the reopenings and laying off staff, creating further pressure for families trying to put food on the table. The cost of food rose for the sixth straight month, rising by 0.6% in June, according to data released Tuesday from the Bureau of Labor Statistics. And again, this is about a 3-minute read. I think you've got the gist of it. This is from Bloomberg. World's most food insecure region hit by lockdown price growth. Panic buying and lockdown-driven price increases pushed up food prices in major economies in sub-Saharan Africa, the world's most food insecure region. Data for South Africa, Ghana, and Nigeria published in the past week showed food prices among the main contributors to headline inflation. And this is just one region. Obviously, it says the worst, and it probably is. But there are going to be something really, really important going on with what happened with this Three Gorges Dam flooding in China. And I highly suggest that you get over to my friend David Dubine at Adapt 2030. That's Adapt 2030 on his YouTube channel. He just did an update, I think it was yesterday, on what this dam breakage means, this flooding means for China in a lot of ways, but primarily focuses on how much food damage it's going, or it has done. So it's all kinds of things, all kinds of vectors hitting at the food supply, the locust situation, this dam breaking, the supply chain breaking down, meat packing plants closing, pickers, farm workers unable to get in and do their jobs. Potatoes was on the Ice Age farmer, just being dumped. I forget the number. It was just a massive quantity. Should have sent it to people starving. But regardless of my thoughts, I think it's important that a lot of people still don't seem to be aware of how bad this food crisis is going to be. And I interviewed David Dubine, and on that topic, he said that the average increase in food during these grand solar minimums, where there's a scarcity of food, is a 7-fold increase in the price of food. Now, I'll take him at his word. I didn't back it up to verify the data, but the idea is sound, whether it's 4-fold or 7-fold. I think the point is a lot of countries that are not as rich as North America, that only spends about 5% of their disposable income on food, a lot of them spend 20%, 25% on food. So if it went up 7-fold for them, it'd be beyond their means to buy food to take all their income. If you take the U.S. at about 5% and you multiply it by 7, you would have 35% of your disposable income goes to purchase food. I know it's going much higher. Is it going that high or not? I do not know. What I do know is that it's there. I just showed you 6 months in a row. It will continue. It'll continue to accelerate. And not only will you have, you'll probably have a lot of intervention by government authorities where you can only buy certain things on certain days, perhaps, or a certain amount of meat, for an example, which is already taking hold in some areas of the country. Only so many paper products, and on it goes. This whole situation is much more devastating than most people realize at this point in time. There's many in this normalcy bias that think things are a new normal, but there's some restaurants are closed, but I can still get takeout, and on it goes, and it's really not that bad. And I'll add the word yet, because it is going to continue to degrade, in my view. I hope I'm proven wrong, believe me, but the trend is in motion currently, and we'll see. depends a lot basically on how fast people can actually get back to productivity, and depending on a state-by-state basis on this lockdown or this next lockdown, it really will have a lot to do with it. If we are able to come out and really get back to productive jobs, which a lot will be gone forever, I know that, and a lot of businesses are lost forever, I know that. But if we can get back the, whatever we can, recover as much as possible very soon, we have a much better chance of coming, to a better place. But if the productive jobs that are going or have the ability to come back are held back because of the COVID crisis, then it's going to continue this trend for the worse. All right, I'm going to be brief on the precious metals. There's so much commentary out there. Most that follow my work are well attuned to, but this is a good one from Mish. Gold has only resistance point left, the all-time high. The all-time high, according to the chart that he's showing us, to the way I'm reading it, looks like 1923.70. Won't argue with that. It's whatever. It's in that range. A nice cup formation. Most powerful formation in technical analysis is a cup and handle. Doesn't always produce a handle. If it doesn't, it just keeps going. If not, the best handle is from the cup formation, from that point down and to the right. And then when the market comes back up to this point right here, almost a new high, the 1900 level, I'll call it, that's when all the momentum traders come in, because once it goes through that cup formation, makes a handle down and to the right is the best one, can go straight. But anyway, once that takes place, you're on your way. And a lot of algos and a lot of professional traders use that, and it works quite well almost every time. So that's it. Beautiful cup, no handle. I just said I didn't even see it written down there. But anyway, smart guy. I only met him once. Anyway, nice job, Mish. All right, I'm going to keep it simple. So this is the same cup and handle on silver. And you can see it's a lot longer duration than the one I just showed you from Mish. It goes back from the high of 1980 and goes all the way through until basically current time, which we're over here. But this is a huge one. Now, a lot of people make the argument this is a large cup and handle, and I won't say it's not, because you can see it. So as you see this high point here in 2011, where it pretty much matched the 1980 in nominal terms, not in real terms. And then you get this handle that comes, as I said before, the best is down and to the right. Now it's gone sideways. And what you would wait for is that breakout at 50. Believe it or not, that's how it works. And then the algos and everything go wild. So we'll have to wait and see. I mean, I really expect a lot out of both the metals going forward. I think this acceleration to the upside may take place earlier than I had originally anticipated. But then at the beginning of the year and through the next couple months of the new year, this 2020, I did not know about the CV19 situation and what the impact would be. Now I have a much clearer perception of it. And because of that and the devastation it's doing throughout the global economy, we will see. But I do now think that we might see an acceleration earlier than, again, as I said. So the other part of it is, before the CV19, I had been telling you, the audience, that we are in a contraction, a major contraction all across the board, even though the mainstream financial press kept saying happy days are here again, longest recovery, and on and on. The reality of the matter is, it wasn't that way. So I'll leave you with that. Remember, there's nothing more important than the truth. Speak it to power. Speak it always. Speak it with your friends, your neighbors, your loved ones, and even your enemies. The truth has power. Live it, walk it, be it. I'll be back with you next week. This is David Morgan, themorganreport.com. Hello, I'm David Morgan, publisher of The Morgan Report, and as some of you may already know, The Morgan Report is about money, metals, and mining. In fact, we cover all resources from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in The Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter. To the point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You will understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.